been a full day. It's been great, and we've got a great final presentation to go with all of that in financing a new C-store. To introduce our moderator, Elizabeth Glenn is an associate architect at KMB Architects. She's been working in architectural industry for 18 years. She's been with KMB Architects since 2010. She's worked in several market sectors with a primary focus on tribal work. She's worked with various tribes throughout Washington State and has close relationships with the 3 tribes in her local area, the Nisqually tribe, the Squaxin Island tribe, and the Confederated Tribes of the Chehalis Reservation. The projects she's been involved with range from anywhere from entertainment venues such as hotels, restaurants, and casinos, to healthcare clinics, to law and justice facilities, housing, C-stores, and others. She's got a lot of experience, so please help me welcome Elizabeth Glenn.
Thank you. A little bit shorter. So thank you for inviting me today. And I'm happy to introduce our last panel. We have David Burrel, who is the president and the CEO of Pinnacle Bank, and Tyler Hannon, who is the Columbia Bank VP and relationship manager. And I think all of our panels have been great today, but this one might be the best one. These guys are here to give you money, so what they have to say is going to be pretty important. David has over 40 years of experience in banking. He's been the president for over 35 years at several different banks. He's been with Pinnacle since 2009 as the president. Pinnacle Bank is 100% tribally owned by the Sac and Fox tribe of the Mississippi and Iowa, which is the Meskwaki Nation. Pinnacle Bank can provide financing for tribal loans such as C-stores, hotels, tribal offices, and other economic development projects utilizing the Indian Loan Guarantee Program. And he'll get into that a little bit more during his presentation. They're also one of the only Native-owned banks that has active trust powers, and what that means is that they can manage minor trusts for the tribes or any of the tribe's general investments. So we're really happy to have David here today. And then Tyler with Columbia Bank, he's been involved in commercial banking for 12 years with Columbia Bank's Native American Financial Services team for the last 8 years. He joined Columbia Bank in 2014 and quickly realized his passion for working with the tribes in the Pacific Northwest and across the country. Since then, Tyler has provided flexibility and creativity in structuring a wide variety of transactions to meet the growing needs of the tribal governments and enterprises. He has experience in providing complex real estate construction financing to tribes. He uses his broad understanding of construction, finance, sovereignty, and compact arrangements to advise tribes on dynamic and complex financing solutions. Projects financed for tribes include gaming, infrastructure, water, sewer, roadways, admin buildings, cultural centers, healthcare and rehabilitation facilities, hotels, water parks, commercial laundry, and convenience stores and fuel stations. So we have a great panel. We're going to get started with David's presentation. There will be time at the end for some questions, but if you have a question during the presentation, both of them would be happy to have you interrupt and ask while they're moving along. Okay. Thank you. Go ahead.
Do you want to get your presentation up there?
Yeah, can you find the Pinnacle presentation? Oh, do I run the, do I have this clicker?
Oh.
Maybe I'll let you say.
You want me to go?
Yeah, go ahead.
Okay. All right. It's a real honor to be here. Thank you for having us. I'm really excited to be here today to share Columbia Bank's approach to really financing your C-store expansion strategy, whether you're building additional locations or starting from scratch with no C-stores and fuel stations. Just a little bit of background here. Let's see. Columbia Bank, we're based out of Tacoma, Washington. We're a $20 billion bank. We're a regional commercial bank. And relationships really are the cornerstone of our philosophy. And custom banking solutions are really what differentiate us from other lending institutions. Columbia Bank has a dedicated, dedicated Native American financial services team. That's a group of 9 specialized bankers that really can meet every aspect of your needs, including credit, deposits, and treasury management. This team was formed in 2006 when we identified a need that was being underserved by regional community banks. And that's really driven by the complexities to lending to tribal governments and the businesses that they own as well. The goal of Columbia Bank's Native American Financial Services team is really to meet the borrowing and treasury management needs of tribal governments and enterprises, whether that's gaming or non-gaming. We really do it all and have been able to accomplish a lot and really make an impact for our clients. Since 2006, we've provided nearly $1 billion of loan commitments to tribes throughout the country, and 1/3 of that going to non-gaming economic development, and we're really proud of that statistic. Just wanted to go over some of the benefits that you've probably heard a lot about different panelists talking about today, really the benefits of a tribal C-store strategy. The first is, I think, revenue diversification, really out of gaming and hospitality. Obviously, there's a huge economic impact. Stable and recurring cash flows can get generated from high-volume retail operations. And then on the last panel too, I also forgot to add in there that really the unmeasurable is the lift that a C-store can provide to a casino and other tribally owned businesses. Another one, which I think is probably the most important, is really the lucrative taxation and revenues that can be generated from the sale of fuel, tobacco purchases, and other sources like liquor, and even cannabis too, but that's a separate conversation. Easy access to financing is really due to the federal loan programs that are available to tribally owned businesses. Those really let banks like Columbia Bank and Pinnacle kind of step outside the box and get really creative and provide a really favorable loan structure to meet your needs. And then lastly, it's not on there, but Cameron mentioned it in the last panel too, employment. That's kind of an also unmeasurable benefit to tribal members and the communities in which these properties are located. Kind of want to walk through our approach to financing a new project or whether it's an existing operation that is going to be expanded. I think the most important thing from David and I's presentations today is there's really no one-size-fits-all. Every project has its own nuances, and so keep that in mind as we're going through this. Every solution is going to be unique, but I can kind of walk through a couple scenarios at which we would view financing a C-store project. So the first scenario, let's just call it a startup. There's no existing C-stores in the entity, no historical performance. This truly is a startup, that how the bank would look at it. And really the challenge here for operators and financial folks that are seeking to reach out to a bank is we really need to mitigate the lack of historical cash flow. Cash flow is obviously how the banks get repaid. And so we would look at it, just not unlike any other, startup loan that we would make to a non-tribal business. However, there's a lot more programs and advantages to being native owned. I'm going to let David talk more about, the specifics of the BIA loan guarantee program, which is really the cornerstone of financing a startup tribal project. But a few of the other ways we can mitigate the lack of historical cash flow, looking at it from a lender's perspective. We got a loan guarantee program from the BIA. That's a really great program that is, I believe, highly underutilized. It's a 90% loan guarantee. something like that is a significant credit enhancement, and lenders love that. And when you get a credit enhancement like that, we can provide really loan terms that are much more favorable than you would get without that guarantee. Another option to mitigate, the lack of historical performance for a startup location would be to secure a guarantee from a related entity. An example would be getting the tribal government to provide its guarantee to the facility. The loan would still be made to the operating entity. However, we would have the backstop of the tribe's balance sheet or the guarantee from a gaming enterprise as well, which has historical cash flow and performance that helps us mitigate the credit risk for a new location. The third option, and this is just something that we've done we're working through a project right now with a client. We're actually lending money to the casino enterprise, and because the casino they don't have any debt, they got great cash flow. So we're actually making a loan to the casino, which is then in turn going to make a loan to the C-store entity so that they can start generating revenues and build up a good, robust tax foundation for which they can continue expanding on. Other info that's just kind of important to know, kind of dovetailing off the last panel, was we want to see a business plan. We want to see the feasibility study that kind of supports us kind of going into a new project. Generally, we look for minimum of 20% equity. That equity in the project could be cash. It could be a contribution of land or property. And it could also be, we see this a lot, we get approached to finance a project and the entity is already 10% into construction. So we could also take those prepaid construction costs as part of the equity as well to help reduce the cash burden on whatever the borrowing entity is going to be. Typically, collateral may consist of business assets, leasehold deed of trust if it's on tribal trust land, and also an assignment of a ground lease that the operating entity has with the tribe for that dirt. Construction due diligence and administration may be required for a new construction project, and this can be a little bit intimidating. Construction due diligence generally means a little bit more upfront costs to do a construction feasibility, and then we have ongoing monthly draws. So those are just kind of the things to think about when you're evaluating all of your financing options. And lastly, generally, we look at loan terms of 5 to 10 years, and then the amortization of anywhere from 7 to 25 years, really depending on the strength of the collateral. And amortization, for those of you that don't know, it's generally just the period at which the loan is repaid. So the longer the amortization, the less burden on the cash flow the loan payment is going to be. The second scenario, this would be kind of more my bread and butter. This would be lending to an entity that has multiple convenience stores. They have historical performance, and they're looking to develop one or more projects in a period of time. The characteristics of a client that we would look at for this type of financing, this is a successful operator. They have positive cash flow at multiple locations. They got healthy gross margins on a standalone and combined basis as well. And there's typically state compact arrangements that provide a stable and recurring source of fuel and or tobacco tax revenues. And then a couple more things. We also look at the operator's ability to scale, integrate systems, and be able to really stabilize a new C-store within a 12 to 18 month period. And then this client is generally one that's looking to rapidly expand its C-store strategy over a short amount of period, like I previously mentioned. So I'm going to kind of dive into that a little bit more here. Two different projects that I kind of want to highlight, and these are just hypotheticals. Let's say a client approaches me and they have a $12 million project. They have existing locations, so we know that they are a seasoned operator. Generally, we will lend up to 80% of the appraised value, and this could be fee simple, or it could be located in tribal trust. Fee simple, we would just do a full appraisal of the property and the improvements in land. And if it is on trust, that's easy as well. We do leasehold deed of trust, which basically is a lien on all the improvements that we combine with an assignment of the ground lease. So it really gives the bank the right to step in and operate that project if there was an event of default. Generally, collateral on a single project like this, similar to the prior slide, business assets, leasehold deed of trust, and/or commercial mortgage if the land is owned fee simple. The second, I guess, scenario that I in this on this slide that I kind of want to expand on, and we're seeing a lot more. We're seeing operators with multiple locations. They have a really robust tax base. These are fuel and tobacco taxes that have grown year over year, and the tribe really wants to leverage that success and rapidly expand. So in this hypothetical scenario, we might give our client, to do 3 new stores, we might give them an open-ended credit facility of $30 million. This is a product that we've kind of tailored to meet this unique need. And this is kind of where we would focus in on the taxes generated by the properties. We've gotten really creative with our ability to perfect tax revenues as a source of collateral, not unlike a bond structure. So that's been a really great structure that's been advantageous for our clients. Repayment on a loan like this, we could do generally interest only, give an open-ended period for a couple years. That way our clients can identify opportunities to purchase land, and then work with their architects and engineers to put together one or more locations. And then generally this type of credit is reserved for borrowers with an established and successful operation. Like I said, that has a stable and strong recurring base of tax revenues. This specific product is the reducing revolving line of credit, and I bring this up because we have kind of over the years tailored it to meet tribal operators of C-stores, and it's been a good product. So we've kind of refined it over the years to help meet the needs of our clients. This structure provides flexible capital to quickly expand and move on new opportunities, whether that's identifying a piece of land on a really favorable intersection or corridor. It's the features of this loan, as I mentioned before, could have a 2 to 3 year draw period where clients have access to the credit and they can draw on it as needed. These funds may be borrowed and repaid at their discretion up to the commitment level. These loans are generally secured. When I say secured, I'm talking about collateral. We generally secure these loans with tax revenues. So they're pledged to the bank, and I'll talk more about what that process looks like here in another slide. But the good thing here is we're able to finance up to 100% of project costs, depending on the strength of the underlying collateral. And also another benefit of this facility is that it's construction light. So for those that are, those operators and economic development directors looking to build fast, this is a really good product that can, result in less administrative burden. And it's also cheaper from a closing standpoint as well. Another thing that's been talked about a lot today, which I think is super important, is tribes' ability to charge taxes and remit that to the tribe instead of to the state. Most tribes here in Washington collect tribal cigarette and fuel tax in place of the state taxes, pursuant to state compact arrangements that are in place. These taxes can be collateralized and to obtain a loan for future projects or to refresh existing locations. How that works is they're pledged to the bank as collateral via a deposit account control agreement. So what we just require is that those taxes go into a bank or into an account at Columbia. And so long as our client is not in default, they're in compliance with all their covenants, they're making loan payments, those funds can be upstreamed to the tribe. How the bank, can use that mechanism to our advantage is, let's say the store is not doing as well as they would have liked, and maybe there is an event of default. Well, what the bank would then do with those taxes is, instead of going to the tribe, they're then swept towards the loan. So that's kind of how the bank looks at those tax revenues in a way to mitigate any of the credit risk. Like I just said, the funds might be used to repay the loan and can be transferred and upstream to the tribe. So highly underutilized. A lot of tribes have substantial amounts of tax revenues going to the general fund. And one way to leverage that is to see if a bank is willing to use those streams of revenue as collateral, which might alleviate some of the reliance on the tribe or the gaming entity when looking at financing options. This is kind of a general overview, kind of a recap, just some things to leave you with here. There isn't a one-size-fits-all loan that can finance your construction project, whether that's a new C-store or you're expanding to multiple locations. We've seen projects ranging from $5 million up to $30 million. Columbia Bank generally looks at financing projects for, max loan amount is probably in the $25 to $30 million range. Loan proceeds may be used for land acquisition, new construction, improvements, and equipment. We've done full-blown travel centers, which include a commercial fueling station. Car wash is another popular amenity that gets tacked on to these projects as well. And then ancillary retail is something that we can include as well. Again, C-stores and fuel stations provide robust tax revenues and returns on investment that are hard to quantify. And so, it's good to know that the folks doing the feasibility studies can really look into that because, working with a tribally owned C-store is much different than working with a general commercial retail location. On these financings, we generally require a limited waiver of sovereign immunity to the extent of the loan amount. That generally hasn't been an issue. And then all of our loans that we make to any tribally owned entity, we do require attorney-prepared documentation. So just keep that in mind when you're going into it. And for those folks on the finance team, we're pretty light when it comes to financial reporting. We're just looking for quarterly or annual financial statements, and we might have a financial covenant. I put in debt service coverage in there. So for those who do work on the finance team, really we're just looking for, does the cash flow of that entity does the net cash flow cover the loan debt service on an annual basis? And generally, our clients have been able to achieve that hurdle with no problem. And for those that operate C-stores that aren't profitable or are not cash flow positive, we would then actually look into, well, what are the tax revenues going to the tribe? And, can we do something? Can we still make a loan to that entity and be okay with that? And generally, the answer is yes. We do include that as part of our underwriting as well. So that said, that was kind of what I was hoping to talk about this afternoon, but really looking forward to answering anyone's questions and meeting some of you here by the end of the day. So thank you. Yes, Cameron?
So, when a tribe decides that they're going to go off reservation on the fee land, and they want to work with the two banks to do a loan, if you're not going to tie it to taxes, because those taxes go to Washington State,
Right.
what is it that you're going to tie it to in our current market?
On a fee simple store, we would just do a commercial mortgage. So if it's a new construction project, the bank's going to go through and we're going to order an appraisal. if we were just, lending to do improvements on an existing store, we would still do an appraisal. And generally, that appraisal is going to give us a valuation, and then the bank's going to probably just make a term loan or a construction loan based on a percentage of that appraised value. And generally, that we're willing to finance 75 to 80% of the appraised value. Yeah.
Any other questions? I can come to you. But I won't stand too close, don't worry.
So both of you participate in Indian country and you see the projects that we're doing. Do you think the access to capital is going to be able to expand in the future for tribes? Or do you see the current economic environment and inflation and uncertainty going to actually contract your offerings?
That's a good question. And I think from an economic standpoint, we've talked about C-stores being an essential business. In the next 5 to 10 years, we don't see fuel sales, tobacco purchases, and just general retail. Those stores are generally able to weather a recession or an economic downturn. Remind me the first part of your question.
Do you think that the funding is going to contract or expand? Sorry.
I don't think so. And I have a couple reasons for that. One of the big, in my industry, when financing in Indian country, whether it's gaming, non-gaming, or tribal infrastructure and other needs of the government, there's really been a push to provide more access to capital for non-gaming economic development. Non-gaming economic development, I think, is at the forefront of every operator's minds and financial person. Really diversifying out of gaming, I think, there's a lot of growth opportunity there. And so from access to capital, I mean, David will talk a lot about the BIA, but the BIA has been historically underutilized from a loan guarantee program. That's the program that they offer. And that program is non-gaming economic development. And so they're really encouraging, financing projects that are outside of gaming for the purpose of economic development. And I think that more of those programs will be, expanding, whether that's just allocating more funding towards it. The USDA has also been connecting with Columbia Bank as well, trying to see do we have any tribal clients in rural communities that have, any of these types of projects, which again, non-gaming economic development, whether it's retail, fuel stations, whatnot. I haven't seen any, and then internally too, from a credit perspective, I don't see us slowing down making loans to these types of clients, especially when we've had a track record of really strong performance. And the clients that we have a relationship with, it's been really good. We've had really good partners that we work with, and so I think we have a lot of confidence in the I guess the operators that we work with. So yeah, I don't know. Maybe in a year from now, if we dive into a recession, things might tighten up a bit. Access to capital might not tighten up. It's going to get more expensive, and credit folks some of the terms that I outlined, they might get tightened up a little bit. So maybe instead of 75% of the appraised value that we would lend, maybe it's 60 or. But I just don't see that happening, anytime soon.
If I could comment on that also, I'm not I don't know, I've been doing the native gig for 10, 12 years, so I'm sort of a newcomer, but I believe I've seen in that last 8 or 10 years much more active, but both on the part of lenders and the tribes, diversifying away from gaming, which includes your hotels and C-stores primarily, and medical facilities, et cetera. I think that'll continue. Now, I think as we raise interest rates, 3 and 4%, it's going to make the underwriting tougher on these projects. I don't look for it to dry up. I just think, like Tyler said, you may see some different credit requirements, underwriting requirements. The BIA, the Indian Loan Guarantee folks, they need more money all the time. I think they get $300 million a year currently, and they're out of money. They used it all up. We're waiting for October to get, hopefully, a continuing resolution, get some new money. Department of Energy, I was at a res or NAFOA 5-6 years ago, and there's a couple guys sitting there at the table, and they've got $2 billion of guaranteed funds. Oh, hey, boy, happy days are here. Let's go do some energy projects. You go talk to them. They didn't have any policy and procedures written. And the last I knew, the last I checked, they've not done any projects. So one of my pet goals is to try and move some of this money that's already been approved by OMB in Department of Energy from Department of Energy over to Interior, so maybe we can use it in the Indian Loan Guarantee. I don't know how successful I'll be. That's an act of Congress to do that. But we've got, for example, NAFOA is interested in helping us work on that. And if we can do that, that gives more access to capital. So more to come. We'll see. Okay.
We also have a question from the chat. Back here.
Oh,
Marcia from Las Vegas asks, in a conversation with EDA, I was told that even if they're making a grant to support a project, they want first position. So they would require the lender to take second position. How would this affect the tribe's ability to put together a financing stack that includes both EDA grants and a bank loan?
that's an excellent question. Pinnacle Bank today is working at this right now with a tribe that has a very nice EDA grant, and we are in the process of trying to figure out the EDA language has a sort of a escape clause in it, if you will, that says something about they have to, unless the project would not succeed or something, or go forward or be financed. So, EDA wants the project to go forward. What I think we're going to try and do, what Pinnacle Bank wants is the cash flow out of the C-store. We don't want to necessarily have a first lien on a building or something that you can't really foreclose on anyway because it's on trust ground. So I don't know how that's going to come out, but I have a feeling we'll be able to work with EDA so that Pinnacle Bank can get comfortable with our position, and EDA is comfortable meeting their, their requirements for their grant. So we hope to be able to do that.
Thanks.
Good question.
Yeah.
Okay. I'm mindful of the fact that here we are, what stands between you guys and a $250 raffle and getting out of here is me. So we'll try and roll through this. Elizabeth gave you some background on Pinnacle Bank. I don't think I need to go through that anymore. We do the Indian Loan Guarantee, the USDA and the SBA guaranteed loans. I bought the bank for the tribe 12 years ago. This was a bank chartered in 1927, so it's been a community bank for years. It was a small bank, losing money actually at the time, and didn't have management succession, so it was available. So we purchased the bank, and of course now it's it's successful in making money, and we're paying some distributions back to the tribe as a result of that. The tribe wanted to diversify away from gaming. They wanted us to handle miners' trust and financial literacy, the miners' trust investing, that is, and because we've got the trust department, we can do investments just like, some of the big-name boys, Morgan Stanley or Merrill Lynch or Wells Fargo or some of those other guys. And then we also spent a great deal of time trying to do financial literacy for the kids, or anybody really. We had, for number of years, we had financial literacy open to anybody, any employee of the tribe, any tribal member or spouse or descendant. And I don't know, I'd say it was mixed. I think today, as a result, we've got more kids going to school, going to college, than we had 8 or 10 years ago. So maybe it's working. But that was why the tribe wanted to get into banking. And, you know, as an aside, there's 20 tribally owned banks and, 578 tribes or something? I mean, I believe there's room for more tribally owned banks. Okay. I did a couple of hypotheticals also here. As I mentioned, you know, we're much smaller than Columbia, than Tyler's talking about. I mean, we're a $275 million bank. And our legal lending limit is about $7 million, $7.25 million right now. So for us to begin to look at some of these C-stores, because you know, a few years ago, a C-store might be a $5, $6, $8 million deal, and today we're seeing $15 to $20 million projects by the time you put in a car wash or some other ancillary services with these things. So for us to be able to do these size projects, Pinnacle Bank has to partner with the Indian Loan Guarantee folks and use that guarantee, because the only piece that counts against our lending limit is the unguaranteed portion. So, you know, you do the arithmetic, we could do a $72 million project with a 90% guarantee, because only $7 million of it would count on our legal lending. We're probably not going to do that big. That would be a huge project for us, but we could. And the other reason we use it, quite frankly, is we're sitting in Iowa. My regulators want to know what the heck I'm doing loaning money to tribes in Washington State or California or Florida or wherever we happen to be. And it mitigates the geographic risk and the credit risk. So it's easier for us to make the loan, and it's looked at very favorably by the regulators. The one limitation, they've got a couple, but one is it excludes gaming. So we cannot do gaming projects utilizing the Indian Loan Guarantee. We've done some small remodels. You know, a tribe wants to refresh their carpeting or something, and they need $4 or $5 million. That's something that we can take a look at, but we're not able to participate in building a facility that's as beautiful as the one we're sitting in here. We also exclude new market tax credits. This is another particular pet peeve of mine. When the regs were written, new market tax credits didn't exist. And new markets, to me, really represent a source of equity that tribes should take a look at when they're trying to get a project going. It's a whole specialized, it'd take a whole day to talk about new market tax credits, but it represents real equity. And the BIA, Indian Loan Guarantee folks, the regs did not allow us to count new market tax equity and use it as equity in the project. So that excludes those projects from what we can do. Taking a look at just a hypothetical, you know, if we use a $10 million project, we want to see 20% equity in the project. One of the advantages of Indian Loan Guarantee is they will give you, or will give you, credit for the land, you know, your trust ground. Even though, you know, we all know it's never going to be foreclosed on, it can't be sold, but you get credit for that. So that helps a tribe come up on a brand new project with their equity piece. And that's been very helpful. Yeah, the same concept would work for hotels or office buildings or whatever. We can do, like I said, everything except pretty much gaming projects. Then we go through some of the things that we need for our package. You you know, we always, every tribe is sovereign, as we all know, and we always have to take a look at each tribe's governing documents, their tax laws, constitution, et cetera. You got to have a business plan, and of course, we've talked about feasibility study. Matt Robinson owes me $5 every time we say feasibility study, but we'll collect from him later. You know, and then we take a look at the audits and the business and the marketing plan and, you know, what you're going to do with your particular project. Financials, all us bankers and underwriters like to crunch numbers, and so we take a look at 3 years' worth of audits. That's been challenging the last couple of years because of COVID. Everybody got extended on their audits. And as part of the project, either the feasibility study, somewhere along the way, we have to have pro forma expectations of what you think these stores are going to do. And I would say the last projects, probably the last 5 or 6 projects we've looked at, the actual performance of these stores has blown away the projections. They've all come in better. People are maybe purchasing more fuel. The tax, the ability to grab the tax is the single biggest reason most of these C-stores work. So if you're on fee ground, you know, maybe you lose that benefit, but you can still make money. It's just your numbers may not be quite as lucrative. New construction, you know, we want to see what kind of contract. I mean, is it a design build? Is it a not to exceed contract? Who's your builder? What is your final specs and plans for the project? NEPA we talked about. I was glad to see the exciting topic of NEPA being covered, because NEPA has by itself been one of the biggest stumbling blocks we've had, or just slowdowns. It takes a long time to get everything taken care of for NEPA. So, you know, start early, start often, get your NEPA done in the early planning stages. Then the leasehold mortgage is, we take an assignment of leasehold mortgage and get that recorded as part of our collateral. And like Tyler said, that gives you the opportunity, hopefully you don't need to. We've never had to, thankfully, go in and try and operate one of these facilities, but it does allow us, for whatever the reason, to operate the C-store if we need to. We've got to have pictures. I like these pictures. These are some of the projects that we've partnered with. The upper left hand is Sequan in Southern California's Travel Plaza. That is one of them that blew away their numbers. I can't remember. I think, did they have 16 fueling pumps? And the last time we talked to them, they're already talking about putting in another 8 or 10. It has just far surpassed their expectations. The upper right is Coyote Valley in California. That is one of the casinos that Cameron was talking about. On the right, you can see a little sign maybe that says casino, and if you remember, we cannot finance gaming. That building looks like it's one building, but it's not. There's a 6-inch space between the left side of that where the casino is, or the C-store is, and the casino. I wasn't a big fan of that when they wanted to do it, because this thing was 2 blocks maybe not even from their casino. And I said, my concept as I travel, I want to get fuel, hit the restroom, and get on the road, maybe grab a Coke or something. And you're expecting folks to come in there and gamble? But it's worked very well for them. At the time, this was before COVID, they put in no smoking. The casino had smoking. This facility was no smoking, no alcohol, class 2 machines, and they had, so you could be in there at age 18. And they were very successful. Still are, I believe, with that facility. But I threw that picture in there because it shows with some flexibility how we figured out that we could make the project work. The tribe's equity went into the gaming piece, and our funds, our loans, went into the C-store piece. Lower left is Santa Rosa's band of Cahuilla in California, and the lower right is Samish's Samcor C-store that just opened this week. We were very pleased. Pardon me? Oh, the grand opening. Sorry, the ceremony was this week. Thank you. We were very pleased to be a partner in that, and beautiful day up there for the grand opening. My only issue with that is their offices are on second floor of that building with a patio off to the end, and it's absolutely one of the most gorgeous views. I'd never get any work done. You're looking at, I think it's Lake Campbell across the road, and literally you can see eagles flying out catching fish. I wouldn't get anything done. But as I looked that day, it struck me one of the, and I'll finish on this, one of the advantages or one of the cool things that I look around, the chairman of the tribe was there and elders and everybody was participating in congratulatory remarks. But it struck me that we had a tribe building a C-store for diversification. It was their first, I believe, first economic development project. So they're diversifying their income, they're employing people, they're generating revenue. They're doing it with a loan from a Native American bank, and they're selling fuel from Cougar Den, who's here. So we're keeping the money in Indian country and utilizing sovereignty at the same time. It was a pretty cool day. I enjoyed that project. So I'll quit rattling. Any thoughts or questions that might have evoked? Or Elizabeth, I don't know if you had any thoughts.
Yeah, you went through most of the questions that I actually had in advance. I was wondering for both of you, though, what percentage of your clients are tribal?
Me to answer that?
Yeah, go ahead.
I'd say right now about 95.
Wow.
I have one non-tribal client right now, and kind of phasing out of that and going to be working full-time on the Native American Financial Services team. So, yeah, it's...
But Tyler has the luxury of having a dedicated Native American, department. Pinnacle, we're probably about half Native. Again, this was a commercial bank in Iowa that had farm customers and stuff, and very little Native business at the time. We've grown the Native business to where we're probably 50, maybe 60% Native.
Were you saying the bank-wide or personally my customers?
Your customers.
Okay, yeah.
Do we have any other questions from the audience or online? Cameron?
We can always count on Cameron.
So first off, thank you both for participating today. Columbia Bank will make sure that we send you a sponsorship form so you can be a formal sponsor for TCSA.
Happy to.
But both of you had comments about the reporting side of things. And so it sounds like in both of your worlds, you're really doing some limited reporting from the financial departments at the tribes. Do you see that changing, since I asked about credit changing in the future? Or if it's not going to change, can we employ you to go to the BIA and work with them on doing less reporting as we go through these projects as well?
Yeah, that's a good question. So David knows better than I do, but yeah, the BIA, anytime you go to the federal government to go through one of their loan guarantee programs, it's a lot of work. And so picking a partner like Pinnacle or Columbia, where we've done a lot of these loans, we've kind of got that. We try to make it as less burden, put the burden on us and not on our clients, because some of these loans can take 8 to 12 months to get closed. From an ongoing reporting standpoint, I see it decreasing over time. Really, when I'm underwriting a loan for financing a C-store project, I'm really, like David, I'm really just looking at the historical audits. I'm looking at your pro forma and projections. And then if we do include the tax portion as part of our underwriting, we usually reach out to the tribal government to get, hey, what have the last 3 years of these tax revenues, what are they comprised of? So really, like, those are, that's kind of the must-haves. And then there's some ancillary reports. Maybe some clients will give us their quarterly financial reporting. But, we usually end up waiving them if we never get them anyways. So, I think the must-haves are really just the audits, the projections, and any tax-related reports that can give us some insight into what the true global impact is on these facilities.
And you just said 8 to 12 months from start to finish for funding. Is that the BIA-specific loan guarantee projects?
Generally,
you
yeah,
partners?
when we've been doing, I'm looking at David and making sure we're on the same page here, because I don't know how long his process takes. But yeah, I had one project that sat idle with the BIA, and this was kind of an anomaly. It was a 6-month, just to get them to get a quorum to approve the loan. So we had our package in, and then we waited another, I think, 5.5 months for that. So it's really, you're really at the, it's really on how quickly can they review the package. But that's why, experienced BIA lenders, understand exactly what they're looking for. So, the value in using, Pinnacle or Columbia or an experienced BIA lender is how can you help package up this so that it is seen, by the BIA and there's not that many questions to follow-ups. But yeah, it's just be prepared if you are going through that process. It does take time. Banks can typically work pretty quick, a couple months to get our approvals, but then it's got to go through the BIA as well. So,
Yeah, I would just follow up and say, I can tell you this, the fastest loan that we've ever got, we sat down at Res and had breakfast with a tribe, and 91 days later, they had their money to purchase a piece of real estate. It was not a construction loan, but that is wildly, don't rely on that. The stars aligned. Part of our issue with them is the tribe made a sizable down payment for this piece of property and signed the contract, and we're going to lose their deposit. So we were able to scramble the Indian Loan Guarantee folks to get that going. But we typically say 6 to 9 months, and it has been a year in some occasions. And I personally think that's unreasonable, but that's that's just what it takes. And Tyler's right. We can do our underwriting in 30 days, 45 days, and get it to the BIA, but they have a process.
So then you helped Samish get through this process, and ours was in my opinion, on the faster end. And that was because you told us to get started on 2 specific things before we even started submitting our application. Can you let everybody know what those 2 items were? Or do you want me to do it?
No, go ahead. I love it when you talk for me. I owe you $5.
The NEPA review, we started that process even before we had paperwork done with you, because that process for us and any tribe can take time, and you've got to get it submitted to a whole nother department in the BIA for them to do a whole nother review, and then any lease agreements that we had would have to go through the BIA review, and you got a whole nother department with a whole nother review team. So yeah, the loan process can be fast, but if you have those 2 things hanging out there, it just adds more and more time. And so you helped guide us through that as well.
Yeah. We can't close our loan until we have the NEPA and the loan, the assignment of the mortgage lease all documented. It's not the Indian Loan Guarantee Department. That goes through BIA Realty, I think.
And just kind of to add on to that, I think the biggest message of the timing is loop us in early. I sit in on master planning sessions with economic development teams on a monthly basis, and sometimes that's, they just assume we'll bring the banker in when we got the package, but there are things that David and I can kind of see being maybe it's an insurance requirement that might take some time, that could delay closing, or something else that might cause an unforeseen delay. But, we consider our relationships as our partnerships. So, bringing us into the fold on what are the plans? Where does the tribe want to go from an economic development standpoint? And, we generally have a lot of experience seeing a lot of different types of projects, and that might be able to save some time on the back end as well. So I encourage you all to loop in your bankers early and often.
Do we have any other questions from the floor?
Okay.
All right. Nice job. Yeah. Fun.
All right, thank you. That's a great way to wrap up a really productive day. I'd just like to say thanks to both of you for, both of you, Tyler and David, and your financial institutions you represent. It's a good example of institutions recognizing the market, being willing to think outside the box, and make some things happen in tribal country. So thanks again, and thanks for being here. Very good presentation. And thanks, Elizabeth. Great job moderating.